Let me turn my attention to markets now. It's been day 3 of gains on Dalal Street. Markets continue to shrug off COVID concerns. Nifty has closed above 14,800. Sensex gained 250 points. On a weekly basis, this was the second consecutive week of gains. Now, don't get me wrong, in the last few weeks, markets have responded to some extent to the second wave. It's not like they haven't at all. But have they really been reflecting the extent of calamity that we are currently facing? The fact that now in most states in India, there is some kind of restriction or the other, that the loss of life has been much more than the first wave. And does it sometimes seem that markets are oblivious? We'll get into that discussion, but first I have my colleague Jayesh Khilnani taking you through all of the data.
So there has been a lot of nervousness around the Indian equities ever since the second wave of the virus has hit the country. Despite the fact that, we have recovered some bit from the recent lows, but still considerably off the 2021 highs as well. And the financial space has been the worst hit. At one point in time, the Nifty Bank's maximum drawdown number had touched almost 20% and was threatening to slip into bear market territory as well. And currently also, if you have a look at the indices that are off from their 2021 highs, those are the Nifty PSU Bank Index, the real estate space, along with the bank and the auto space as well, which have declined more than double digit from this year's high as well. What's done really well has been the broader market space, both the small and the mid-cap indices currently trading at multi-year highs as well. But also if you have a look at the money flow into the country, the FIs have been a tad bit cautious because since the start of financial year 2022, the FIs have withdrawn more than $2 billion from Indian equities, and that's the highest that we are looking at in terms of other Asian countries as well. But all's not gloom and doom. There has been spouts of good news as well in terms of the earnings that are currently ongoing. If you have a look at the Nifty's Q4 FY21 EPS estimate, analysts are estimating about 160 rupees or thereabouts. The companies that have reported so far, which is exactly half the number of Nifty companies, those are slightly ahead of expectations as well. 95 rupees is what we have clocked on an actual basis versus an estimate of 94 rupees. And also, there are marquee names in the market like Rhythm Desai as well as Sajid Chenoy, who also say that, the vaccination drive acceleration will be the key monitorable going ahead for Indian markets.
Right, glad to invite Nikhil Kamath, co-founder and CIO of Zerodha, on the show this evening, and Ajay Bagga, market expert. Welcome, and great to have you on the India development debate. So the point, Nikhil, is, and let me begin with your view, is that are investors looking at the stock markets and the gains in the stock markets completely cut off from the reality of what is happening in India right now? Is there oblivion to what is happening, or is there unfettered optimism that this too shall pass? What are we seeing right now in the markets?
Hi, Tamanna. Personally, I think, it is a bit weird that nobody's paying attention to, all the pain we guys are seeing on the ground. I think everybody in the country is today. Stock markets tend to be forward-looking and very unemotional. Nobody can really predict, why they might be going up or going down, but they generally tend to be pointing in the right direction. And if they are going up, I'm guessing the reason will make itself clear in a couple of months. But gauging the situation on the ground, I drive around, or if I look out of my window, everything seems to be shut. So whatever large corporations might say, that pain will show itself at some point of time.
Yeah, absolutely. If you're looking at Q4 earnings, they're not factoring in what we're seeing right now. Nikhil, just another word from you. Would it be fair to say that it is a tad insensitive? I'm not saying that markets should reflect the extent of grief in this country. It's a different thought process completely. It works on clear-cut factors, on fundamentals, on technical analysis. But to be so oblivious to what is happening around you, as someone who lives and breathes markets, do you find that disturbing?
Slightly disconcerting. I think the need of the hour is there are very many cash-rich corporations out there which are listed on the equity markets. For the government to, come out and say that they make CSR 4% from the existing 2% and make each corporation responsible for their own community, for their own employees in terms of vaccination. I think that tiny step would go a long way. And, I think we have to come to terms with the fact that one large organization or a government at the center cannot do everything, and people have to participate across the country, especially corporations. Some kind of nudge in that direction. Maybe it is, maybe the revenue or the margin loss is made up by giving some kind of a tax swap to these corporations. But something on those lines should be looked at to make this effort in curtailing corona more fragmented versus relying upon one common entity.
Ajay Bagga, to be fair, this has been the case around the world, hasn't it? American markets, US markets also didn't necessarily reflect what was happening on ground when they were in the grips of their second wave. But how do you gauge the gains that we're seeing in the Indian markets when the signals are clear that the economic impact of the second wave is going to be fairly huge? You've seen the S&P report, you've seen what IMF have said yesterday, and the recovery that we were seeing is going to get stymied one way or the other.
Rule of thumb, you can say 1% of GDP growth for the year goes off with 1 month of lockdown. So we are looking at, and May is not going to see a very big, reopening. So we are looking at 2% getting shaved off the 11 or 12% GDP growth that we were looking at. About 5 to 6% of corporate earnings will go off. If the credit costs increase for banks, especially places like the MFIs and the PSU banks who are under the most threat, I think that could have a further issue. The FIs are voting out. If you see, we got 150,000 crores of inflows from September till February. March saw an outflow and April has continued strongly. April saw 9,000 crores plus going out. And May, in the first 5 days, we have seen 5,000 crores being withdrawn from FIs. So that's a negative. What is the positive? The biggest is $23 trillion of stimulus has gone into the global economy, Tamanna. That comes into asset classes. And that's what's holding up global markets. It's not only us, it's all the cryptocurrencies, it's all the global markets, it's the commodity complex. You look anywhere, asset owners are very well off because of the amount of money. Second big part is the anchoring bias. Last year we saw this. February 16th, the market topped out. March 23rd, it bottomed out. Fastest bear market and fastest recovery, very sharp recovery. Everybody missed out that except for the retail investors who were doing SIPs. This time around, everybody is in that disbelief. They're saying, like last year, the conditions are similar, the liquidity is similar, money supply is similar. RBI has come in already. Nirmala Sitharaman has woken up from her slumber after the budget. She's started coming on TV again. Something will come by. That's what the market is looking at. But what you started the program, I think the biggest issue is this government and most of the governments are still very much into signaling, into social media rather than sharing. I would like that every day you should be putting out how much are the vaccines being produced, not the 11 lakhs that are being given, which is a pittance for a population like India. We need to know how many are produced. Why is Pfizer not approved? Why is Sputnik not approved? Why are the 6 pharma companies which can produce Sputnik still not producing? Where are the imported Sputnik vaccines coming and where are they being allocated? I think if we had that, Tamanna, that would really inspire confidence rather than the scientific advisor changing his terminology and trying to push another fast one. I think the country has had enough of fast ones being pulled over their eyes. We need some real solid data. The country will survive, corporates will survive, but these listed corporates are not India. The pain is going to be very huge. It's already huge. The migrants and the SMEs worked out their savings last year. This year, they will be wiped out. So it's not only that these companies, the corporates or the markets are reflective of India. The pain is widespread, Tamanna.
Nikhil, the question is that what are investors thinking and who are these investors? Because FIIs are also selling. Are these the retail investors from last year who came in after the pandemic and who, like Mr. Bagga said, don't want to repeat the mistake of February 2020 when they sold in a panic and then missed that mega upswing? So they're sitting tight and hoping that history will repeat itself, that the RBI will come in with something, the finance ministry will come in with something, and kuch na kuch to ho hi jayega.
Yeah, so I think the domestic institutions have come back to a certain magnitude. They are buying. But Tamanna, bear in mind the retail ecosystem in India, even though it has grown a lot, is still minuscule. Only about 2% of our country has either direct or indirect exposure to financial markets. When you compare that number to the West, they have maybe 60%. So a lot more new people coming into the market could be one of the triggers as to why the markets are rallying. But if I had to advise new investors coming in, I think you compare what the multiple of the market today is, notwithstanding the pandemic issues, it's significantly more expensive than at any point in our history. At 25, we could still be called reasonably valued, but at 40 times, people really have to, weigh in, diversify, create some kind of a hedging mechanism before they enter. To vanilla buy equity today at the frothy valuations that they sit upon might not be the best way forward, especially for a new investor who is coming into the market.
I also want to get a sense of what the other reasons could be, Mr. Bagga. And do you see this optimism that we're seeing in the market change if vaccination doesn't pick up? You made a very important point about the vaccine figures, the daily vaccination figures, which are not looking good. The supply side choke is going to be there for the foreseeable future at least. Is that something that the market will start now assessing and adding in when it's looking at valuations?
Absolutely. Tamanna, you compare it to the US with 33 crores population. The best thing Trump did for the US population was in September, he gave money to Pfizer. He made them produce on risk. Out here, Poonawalla was taking himself the risk and producing. He kept asking for money. We woke up in April. These Covaxin guys are very small. He's a 200 crore company. And what do you expect him to do? In April, you announced flamboyantly that we are giving him money. Pfizer came in December and said, we would like to apply. We said, okay, you please go through this. Nobody got back. February, they quietly removed. Pfizer is producing vaccines and sending out. Pfizer just sent 20 million of vaccines to Mexico from the US production. So it's a misnomer that Biden and Kamala Harris don't want to give us vaccines. Where have we gone? Sputnik was ready. Six people have assembly lines. There are so many other companies, your Oro Pharma kind of companies. They have so much installed capacity. This is a war zone. You should be talking to them, making it remunerative for them. And we should be doing 1 crore vaccinations a day. That's what China has hit on April 30th. And still it will take us about 250 days to vaccinate the entire population. Even at that run rate, But right now, we are sitting on a disaster. And, I'm really very irritated by this scientific advisor using this terminology, Tamanna. We have analyzed the top 30 economies. 4 are still in first wave, 10 are in second wave, 16 are seen third and fourth waves, including the likes of Italy and Spain, which are developed countries much ahead of us on the Human Development Index. And how can you say that, when you have such a virulent strain going on and you're doing 11 lakh vaccines with no clarity, no money going into the vaccines, nobody coming and addressing it on a war zone basis. Oxygen, we have so much oxygen available in South and East with all the steel plants. You have to make a logistics exercise. Finally, what is happening? Army is running it, Railways is running it, and Air Force is running it. That really speaks about our preparedness. We keep patting ourselves on the back that we have this polio vaccination. Yes, it was built over 30 years and despite the bureaucracy. Now to build that in 6 months with this kind of a bureaucracy, which creates stumbling blocks at every point, is very difficult. For that, you need a top-down approach, put in a lot of money. That's what Trump did. And Biden, what did Biden do? He let the doctors talk. He let the doctors work. They have vaccinated 200 million. They have reached 60% of the population. They're saying, don't wear masks, just like Israel, just like US. Even at 27% vaccination, Tamanna, will start beating this virus. So it's not that it is very difficult. Take on whatever is available in Sputnik, whatever is available in Pfizer, and give it out to all the hospitals. Don't tell the states today to go and negotiate with everybody. They don't have the capability, and no other country does this. So there are multiple missteps and being covered up. It's not a social media game to win the war. You have to win the war against the virus. Every single group that I am in, Tamanna, I have lost 2 schoolmates. 2 school batchmates are gone. My MBA batchmates, my college batchmates, every week I see 4 to 5 people in their families going. And these are small batch, 100, 150 people, 200 people batches. And just imagine how far this virus is reaching.
Yeah. No, the human tragedy that we are facing is unbearable, truly. I mean, day in and day out, as journalists, we talk about the facts and what is happening, but nobody right now is inured to the grief that, collectively is being faced, which is why we're asking this question today, that what is the market betting on? From the context that the markets tend to be a reflection of the optimism of what India is, what India can be. It's a bet on the future, which is why in that context, Nikhil, do you expect this streak to continue? Or will all of these worries, some of which Mr. Bagga has spoken about, start piling up?
These worries will start piling up. I have a slightly contrarian opinion on the whole thing. Even though we don't see equity prices correcting, I feel like the value of money itself is kind of going down. The American economy has been very irresponsible with the amount of currency they have printed. Ideally, in any other situation when there is so much supply and so little, so much little consumption on the other side, you would expect inflation. Inflation might not be showing up at the end level, at a product level, but if you look at the price of steel or many other commodities for that matter, I think inflation is already making a comeback. With higher inflation, I think there will be an economic slowdown. Maybe it is rooted in the West, but slowly makes its way into other countries across the globe. Much like everything else, we will lag that too by a year or two. But personally, in my own opinion, I feel markets are frothy at the current junction. New people coming in, the advice, it's to reiterate again and again, get diversification, stay in large cap, quality equity, because at least there you're relatively safer than buying into small, mid and small cap companies.
Absolutely. Well, we're all part of this society at the end of the day, and when a tragedy of this scale hits, it's impossible for any one part to cut off, nor should we. We all have to lean in. We all have to pitch in any which way we can. So whether you're making money on the markets, or you're running a company, or you're a salaried employee, or just someone who can reach out and help, right now is the time to do it. Thank you so much, Nikhil Kamath and Ajay Bagga, for joining us on this discussion.